Hello there. So did you know that bookkeeping is not a journey to perfect? It is a journey to close enough, to materially right. Now, I'm not saying that bookkeeping or bookkeepers or accountants are just sort of going about their day saying, good enough. But what I am saying is that errors happen in a set of books or in any, well, they happen everywhere, but the important thing is materiality. So what do I mean by materiality? I mean, if we can get to 95% of the way to perfect, and the last 5% is going to take an insane amount of hours, or it's going to cost more than we're looking for in that error, or it's prohibitively expensive from whatever resource we're talking about, then, and that 5% does not change the way that we view the financial statements or the financial information, then that 5% is not worth going after. It's not worth spending, I don't know, $1,000 in wages for someone to find that little piece that's not quite right if the error is only, $20 or it's only $50 or something like that. You're better off leaving that error, which is, 20, 50, 100, depending on the size of the company and where it is. You're better off leaving that than paying a ridiculous amount to try and find it, especially because that little piece, that $20, that $50, probably doesn't change the way that you view your financial statements. If you had, $5,000 that you paid in interest for a whole year and it was out by $20, that probably doesn't change any decisions that you're making, because $20 versus $5,000 is not very much. This scale, or this idea, becomes even more important as the company grows. So when you're talking about a small company, then it's a lot easier to get to that 95% because your transactions are lower, it's theoretically less complicated, that kind of thing. But when I worked for the big company, the multi-billion-dollar company, there were errors that we would find every month. Every month we were putting in corrections for things that had either happened as part of the month end, or they had happened in prior months, but we were just finding them now, or whatever it was that had happened, there was always error corrections happening. And inevitably, we won't get all of them. And that's actually okay. And it's totally normal. This company was not a bad company. They didn't have a bad accounting department. This is just a normal part of being a giant company. Your bookkeeping is inherently flawed in some way. And this company would get audited every year, and every year the auditors would say, yeah, it looks good. These, if we had come across a little error here or there, like they just weren't big enough to warrant going and trying to find what had caused that problem. Now, that's not to say if you know what caused the problem, or you know where the error is, that you shouldn't go fix it. You should do that. But if you've got to that 95% and it's materially right, then that extra 5% just isn't worth it. And we can always fix things later on too. Maybe you have an error and you didn't know, and you find it later, and it was just a little guy, and you find it, so you fix it and you move on. So why am I telling you this? Well, I am not telling you this to worry you or to stress you out or to make you think that, oh my goodness, this is just so gray and there's really not any rules or anything like that. That's not true. We all, especially designated accountants and people with training in bookkeeping and that sort of thing, they know the rules, and they're, you know, applying their knowledge to your books, and they're doing their absolute best, and we're getting to that 95%, and that's okay. What I am saying is not to worry about it. I have a lot of clients that worry that it needs to be perfect. Their taxes need to be perfect. Taxes need to be maybe more like 98%, right? Because there are rules and the CRA is on it, but that we can sort of let go of our idea that bookkeeping needs to be perfect. It doesn't. As long as those mistakes are small and, you know, they weren't fraud, so you didn't do them on purpose, we're all human. That's right. Accountants are humans too. So if you want to know more about this kind of thing, about whether your books are materially right or not, I can't tell you that necessarily, but I can chat with you about it, what that looks like, and I can offer you a free download of 7 common mistakes small business owners make. These ones do matter. These are not just little guys that you can not have to worry about. I will leave a link to that download in the description somewhere. It'll be in a little white box with words in it. And you can go to the accountingmistakes.ca and download your free PDF. I am happy to chat with you about any of this, as always. So if you'd like to get in touch, please send me a Facebook message. I will see you all tomorrow.